All right, shares of DoorDash on the move this morning, hitting a record total orders in the most recent quarter. Stock up about 0.8%. Company also went out and raised its full year forecast. DoorDash, a company that does the thing, Julie, that I like more than any other, which is writing a nice letter to investors along with its earning release. Founder Tony Xu out with a great letter where they kind of just talk. I mean, honestly, it's just business theory, how he thinks about investing in businesses, what the long-term value of their investments might be. And I think, in this, we get to the discussion of the marketplace business for DoorDash, because you hear DoorDash and you think, oh, it comes to my door. But them setting up the suite of services for companies, they are now doing delivery, they do point of sale. And that vertical for them really being the growth driver, I think has been an interesting revolution, evolution of the company, I should say. And getting away, frankly, just from the name that's on the front door of the company.
Right, that it does not just DoorDash, but like Stack.
It's a stack. Yes, it is the tech stack for a restaurant operator. And then, yeah, sure, if you actually order the delivery, you're hit with like $7,000 worth of fees, right. But you don't have to just do that. There are other ways for them to partner with restaurants that I think are a lot more palatable, both for consumers and for restaurants. And that, really is the growth driver. And I think over time, there's never going to not be a delivery part of this business. But, if you can almost, and you get this theory in the letter, it's the classic kind of Amazon thought around, well, this is our best business now. But what if it just wasn't? What if we intentionally tried to make something that was better than what makes us money now? And what would our company look like longer term? And I think you start to see some of the outlines, for a company that came public, had a very positive reception, had a lot of problems last year, like everybody who was public in the stock market in this kind of general space, and is now getting, kind of on the other side of that and starting to really think about what does our life look like long-term as a public company? Right.
So there's the sort of stack in technology, and there's also the stack beyond restaurants, strictly speaking, right? Delivering other stuff, whether it's other food or sundries, whatever you want to call it. And it's hard to know if that's as big an opportunity as offering a bigger suite of services to its customers.
I mean, to bring Amazon back into it, the experience on Amazon's retail site, I think, has been talked about enough at this point.
But now the reporting was out yesterday that they're now changing that. They're consolidating their various food things, which makes sense because it's pretty dumb the way it exists.
So I guess, all I was going to say is, I think there's been an opening here for other marketplaces of any sort. It could be food, it could be pharmacy, it could be all kinds of clothing. There's an opportunity here for someone, for many players, and we're seeing it, across spaces, to offer a better, let's say, retail aggregation experience, perhaps, than the original.
Yeah. And then there's little players like GoPuff that are out there too, doing grocery delivery.
Yeah. Well, I mean, if you go through the letter, they talk about the example of how much money they were losing on their delivery business, but the unit economics were actually good. Problem is, there's a lot of smaller players that have lose a ton of money and don't have good unit economics on some of that delivery, and so
DoorDash has the advantage.
We're still in the ZERP era of thinking in a lot of ways. If that makes sense.
Interesting. That does make sense.